everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for futures and Forex for trading on 1/26/17. Very interesting day today. We had a lot of movement, the Dow pushing above that big 20,000 mark. Finally, you can almost feel the sigh of relief as we make it above that 20,000 mark. A lot of traders will have been waiting for that, and that caused a lot of interesting stuff. We also had President Trump speaking at the borderland security area, so that can definitely cause some back and forth as well. I know the Mexican peso is going a little bit crazy, so for you Forex traders, if you want to track the volatility, you're probably going to see quite a bit there. So let's jump on in here. We're going to take a look at our big six markets, three on the futures being gold, crude, and the Dow, and then we're looking at the Forex markets for the euro, the yen, and the pound. And basically what we're doing is we're looking to formulate an attack method for tomorrow so that we can approach the markets as prepared as possible. Now, gold first up on the list. Gold overall, nice drop lower. We started off the day looking kind of shaky, relatively range bound, not a whole lot. They broke down, but then they kind of continued that range bound movement. Once they finally started letting loose, it completely fell apart. I mean, just smashed to the downside. So with that big drop in prices, generally speaking, it's too much too fast, right? I mean, you can see this is a parabolic curve on the way down to where it was almost vertical on the way down. So with that vertical movement to the downside, it's just something that is unsustainable. The markets are going to have a very difficult time holding that kind of aggression and keeping it going. There's just not enough sellers for that to happen. So what ends up happening is all of the sellers who were selling all the way up here, they're going to start taking profit when they see signs of weakness, especially when the market tries to come down, fails, tries to come down again, breaks a new low below that last one, and then fails again, comes back, finds support off of that prior swing, and then fails again. There's a lot of red flags there for the sellers to begin exiting, and you start seeing a bullish correction up. Now, what we're looking for is major resistance off of 1200.4, big round number 1200, of course, and then also a major target for the buyers off of the lows at 1202.2. That's where we're looking for the sellers to regain interest again. That's where the majority of the drops started, and that's also trapping out some of the buyers. Some buyers will be taking profit up there. Sellers will regain interest at around halfway back. They're basically getting a sell opportunity at half the cost. So it allows for a lot of traders to fight over one level, and we'll probably just end up in a range. So right now looking to sell at around 2.2 down to 1200.4, and then looking for an objective to the downside back to the lows. See if they want to break back down there, sub 1200, start pushing into the 1193.3 to 92.6 area, and then from there we'll probably just find buyers underneath again. Over on the crude oil, even more range bound. This one's a little bit of a different story though. Pretty major amount of support coming in at the bottom from 52.60, arguably down to around 52.55, but it looks like most of them respected that 57 area slightly nicer. Now, we did start the day off as a little bit of a range, poked its head just above the high, and then got slapped right back down. Now, once we found that low, it's sort of the same thing as that we saw in gold, just not as extreme. Very aggressive move to the downside, all in one shot. Again, unsustainable movement. The markets are going to have a very difficult time keeping the market all the way down here when all the sellers are already in. They don't want to add more to their position. They're already probably at max risk. So what they'll do is they'll look to reduce some of their risk by taking profit. That causes the market to go up, find resistance in the earlier area of support here, here, now turning around, adding into resistance, and driving back down. And once again, they find support, and then we go into the inventory numbers. Now, the inventory numbers came out pretty much as expected, which is weird because it was a bearish number, but it caused a big bull run higher. Now, likely the news was already priced in, so all the sellers that have been in all morning when it came out as expected, they exited, and that caused the market to rocket to the upside. Again, unsustainable movement on the way up, and it's further confirmed by a doji top, bad bull candle, and then a bear spike lower. So buyers will buy into the pullback because they assume that they're going to at least make an attempt at the run towards the highs, but that fell apart and started collapsing back down. Now we have the same story on the other side, unsustainable bearish movement. We're still going to find sellers here that are looking for another attempt down, but more than likely they're not going to see it. They're going to get something like a lower high, and we'll probably even see something relatively equidistant. So you're looking for support at around that 52.70 area, but if the sellers are able to get to a new low, you're anticipating more support between 60 down to 57, and arguably even down to 50 if you want to give it about a 10-tick zone. Now, given that we are slightly exhausted down here, what I would really like to see is for the bulls to correct higher. We have a nice little spike and channel here, break down into an area of support at around that 5280, push back up, retest the highs in that 5303 to 5312, and then look to sell back down to the lows, because that would give you what I guess would be considered fair price. Nobody wants to sell this far down after seeing the sellers exhaust themselves in one move. They want to sell at better prices. And what better place to do it than where we found all of the chop and resistance from earlier as support and resistance. If they can come back to there, it'd be very interesting to see if the sellers want to defend. So looking to sell a little bit higher up for the move back to the lows. Over on the Dow, well, I don't know how much more of a bullish market you can ask for. Yesterday we were talking about how such a strong move up may just find us going into a range. They may continue it, but chances are they're going to pull back. They did not really do that. I was looking for a deeper pullback, and they couldn't really get it. You can see the big buy spikes even in the early mornings, midnight, 10 o'clock last night even. Lots of big bull spikes inside there, and it really never stopped going higher. Went into a little range there, and once it broke out, never came back. Big pullback at around 5 o'clock or so, and then just a rocket ship to the upside. So with this bullishness higher, the buyers are very likely taking profit off the table. Nobody wants to fight around that 20,000 mark. We've been waiting for that mark forever, and you can see a lot of resistance coming in that area on both sides. Support, resistance, support, resistance. Now, obviously, this has a bullish tone. It's very hard to disagree with the buy case. What I do disagree with, though, is buying way the heck up here. I don't want to buy this far up in a market that is this extended to the upside. I would much rather wait for a pullback, at least down to 19,975 to 971. If not that, maybe even a little further to 942 to 935. I still want to be a buyer, but I want to buy at a better price before getting that finalized move back to the upside. So looking for the buyers to push back to a new high, but I'm not anticipating that high to be that extreme unless we can get a good pullback before it happens. So looking to be a buyer, but a little far away at the moment. Over on the euro, another very range-bound market here. We had a range start to the day. They tried breaking out, completely fell apart, pushed up to a new high, fell apart, and now we're just kind of meandering in this new range that's formed inside here. Now, looking at the overall move, I mean, yeah, you could consider this entire day to be a range, but generally when you're looking at ranges, you want to find the areas that found the most support and resistance. That's why there's 4 different price points on here. The absolute low and the absolute high, sure, those may end up being the big range, but at the same time, it's very difficult to ignore the amount of resistance and support that came in this intermediary range. So until we break out of one side of that, we're looking to sell sort of high and buy sort of low. And if it does break higher, then look to sell high and buy low. Need to stay out of this middle area. This is a no trade zone for me. I do not want to play around with all of that back and forth in the middle. And then over on the Forex markets, again, we have the pound dollar. Now the pound looks a little bit better. We have a nice bullish run to the upside. Big bull breakout at 4 o'clock and sustainable movement showing the follow through. Buyers likely took a little bit of profit there and continued it on the way up. Now they tried getting a little trap and a push back down. This is one thing that we love looking for, is this little trap and a reversal. And all it managed to do was pull back about, not even halfway, maybe about 30% or so, a third back. And then they started finding support. Now, normally when they pull back, they're going to come back to an earlier area where they broke out of. They broke out of this swing high. Chances are you're going to see them come back to that area, and they didn't. So the fact that they missed that move shows the amount of buyer strength that's still in here. They're not even letting it come back to resistance turn support. They're buying it ahead of it. So with that amount of bullish pressure, we get a big rocket to the upside, a pullback, and then a finalization of the move. And that does form a slight little wedge top up here. We can see the resistance across, and we are also forming a tight little channel here to go along with it. Now, what I would really like to see is a pullback. I don't want to buy this far up. Just like here, we had to get a pullback before the big move occurred. These pullbacks still gave moves, right? They still gave nice moves to a shallow new high, but really, I want more than that. I want a bigger move, and to get that, we're going to have to get a little bit of a deeper pullback than just these little tiny ones. So what I would like to see is a pullback down to that 6,005 area to 59.52. for the first area of support. If it wants to break down through that, you may be able to use that as resistance down to 25,564 to 503 to get a bigger area to see if the buyers are still interested. Now, we may find that they want to push down and actually test that high, which is at 25,417. But either way, looking to be a buyer down here and shove the market back up. And then finally, over on the yen, we have a range again. Shocker, I know. Big range overall, lots of resistance at the highs, and we actually formed kind of a double area of inventory. The market pushed up, and we had a major area of resistance yesterday afternoon at around 6, 7 o'clock. Big drive lower. They went into a range, and then a big drive lower again. Unsustainable breakout movement, and that was met with a big reversal to the upside. Now, the big reversal, notice what it didn't do. It didn't break to a new high. It broke above the intermediary highs, and that's where they found a lot of resistance, but it never actually broke through the overall high, and that's a big clue. That shows that the sellers are still interested enough to hold it underneath that low. So if we do get this bearish movement, and we are seeing some continuation to it, what I would look for is a breakdown of the low of day, which would, in this case, be 113.040, and then maybe even look for a little more continuation underneath that by 10 or 20 pips, and then look to become a buyer on the range. Just due to this lower high, there's a good chance that we get a lower low as well. So keep that in the back of your mind if you're going to try to buy low. Overall, though, still a range, looking to sell high, looking to buy low, possibly with a slight little offset down here. Overall, though, pretty straightforward on the yen. So that's going to do it for today. Play it safe for the rest of the day going into tomorrow. Tomorrow, we do have a little bit of news to contend with. When we're looking at the news, generally, I really only care about the big stuff. And when it comes to the big stuff, there's not a ton of it. We do have some coming out for the pound tomorrow morning, the GDP. That's going to be at 4:30 Eastern time. It's in the morning, so be careful if you're trading the currency markets on the pound. And then tomorrow we have the 10 o'clock new home sales, which can definitely cause a little bit of back and forth. Now, also, just as a note, tomorrow is Australia Day. That is a holiday in Australia. So the Australian markets, any of those Forex pairs or anything directly related to the Australian markets, maybe a little bit slower or closed, depending on which ones you're looking at. So play it safe on those. Other than that, though, as we always say, make a plan, trade the plan, follow those rules, and we will see you all tomorrow.